those pre-IPO investors who got in early saw their holdings of 30%. Will the NSE story be any different? This is a rock-solid compounding for decades kind of story. NSE's market cap is higher than NASDAQ. This shift has resulted in BSE doubling its revenue in the last year alone. NSE's revenue and profits are up 6x in last 5 years. Hi everyone, welcome back to the channel. There's been a ton of buzz lately about the most awaited IPO in India, NSE. As with every hyped-up listing, unlisted brokers are already in full-on FOMO mode, pushing these stocks left, right and center. Remember what happened with the Swiggy's IPO? Those pre-IPO investors who got in early saw their holdings of 30%, and that's even before the lock-in period ended. So the million-dollar question is, will the NSE story be any different? Let's break it down. Let's start with the big narrative. NSE is seen as the ultimate proxy for the India financialisation story. As India's financial markets expand, NSE is expected to keep riding that wave. No one's doubting that India's markets are going to get a whole lot bigger, or that more and more investors are coming in. And get this, NSE has over 90% market share across almost every major segment. So from a business standpoint, this is a rock-solid compounding for decades kind of story. But let's not forget, India is still tiny compared to developed markets. Back when I used to work in Goldman Sachs, one of the biggest complaints from large investors was always liquidity. To put it in perspective, US markets see a daily trading volume 20-30x higher than India. That's the kind of scale we are talking about as the end state for NSE. But here's the catch. As volumes go up, fee income per date usually goes down because it's a tightly regulated business. If you see the right side of the table, NSE's market cap is higher than NASDAQ. Yes, NASDAQ, one of the largest, most established exchanges in the world. We'll dive into valuations in just a bit. For years, BSE, which is the oldest exchange in India, lagged behind innovation and new product launches, while NSE steadily dominated the market. But recently, the stance has shifted. In just last 6 to 8 quarters, BSE has aggressively expanded its product offerings, especially in options trading, capturing nearly 20% market share from NSE in key segments. This shift has resulted in BSE doubling its revenues in the last year alone. The latest industry data clearly shows BSE is now driving significant share of incremental revenue growth, which has resulted in NSE's revenue growth slowing down. The competitive dynamic is also changing really fast, and it's something investors need to watch closely. Now on paper, NSE's revenue and profits are up 6x in last 5 years. Sound impressive, right? But here's where you need to hit a pause. First, the past 5 years have been an absolute dream run for Indian F&O and capital markets, thanks to trillions of dollars in global liquidity. You cannot simply extrapolate that growth forward forever. Second, capital markets always look the rosiest during bull runs, especially when unlisted brokers are pushing stocks with barely any public info out there. Bottom line, NSE is being valued as if only the best case scenario will play out, forgetting that capital markets are ultimately cyclical. So is NSE a short growth story, or are we looking at another pre-IPO hype cycle? Let me know your thoughts in the comments below. If you found this deep dive helpful, smash that like button and subscribe for more videos like this. Thanks for watching.